Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Joby Aviation, ticker symbol JOBY. And so here I am recording this on Wednesday, October 30th during market hours. And Joby is currently trading right around $5 a share, being down a little bit so far on the day. But of course, that is changing as the market is open. And so, yeah, I wanted to go over the chart here because we did get a pretty massive pullback over the past couple weeks. And, I wanted to go over that where we might be finding some support a little bit lower than current price. But before I get into that, I did want to go over some levels from the past that were kind of, acting as tells that we would be getting rejected here, or at least would need to be breaking through with a lot of volume, which we did not see. And so one of those levels is this red uptrend that I have here, going back to the daily low of $3.15 from December 27th of 2022. And then the other pivot point being the low from the end of April 2023. And so that is how we get that trend line. Does look like we broke below it over here, consolidated below it with a little bit of a fake out. And when we did break above it, we formed this downtrending purple line, which is based on the high from June 29th of 2023, and then coming back to that pivot high from, it looks like, July 16th of this year. And as we can see, we got a wick up to both of those levels, but closed right about at the red uptrend, and then, opened right about at that uptrend, but then closed below, getting a pretty massive down move on October 24th, coming down a little over 3% on the day. But then the following day, gapping down on October 25th, coming down almost 15%, and we have continued to fade lower. And so one of those levels is this horizontal line, which is the 786 from that from the Fibonacci that I did going back from that low at 315 up to that high at 1198. And so that not only being, a significant level, the 786, a notable one we might and typically do retrace to, that is at $5.04, also being a psychological level, with it being, one $5 bill, a whole dollar number. So that could be acting as support. But what I find to be a little bit more compelling, which also does require a little bit more patience and could correspond with, their earnings report, which it's not popping up here on the correct date, but their earnings report is coming out on November 6th. So if we are holding these two levels, maybe we do see a bounce, perhaps going up to that purple downtrend. So that could be a really nice swing. And so this orange uptrend that I have drawn here is based on the low from April 22nd, which was at a price of $4.50, and the other pivot point being the low of August 5th when the markets were gapping down. It was a kind of a crazy Monday starting off that week. And from there, we did get a couple more bounces from that orange trend line. So I could see us retesting it again. But since this would be, about the fifth time we have touched that level, it's quite possible we could be breaking lower than it. So, I do have this yellow line here at $4.70, which was the low from September 6th. And so, I kind of view that as a stop loss level. It would be great for us to be retesting this uptrend right before earnings and then get a bounce up to this purple downtrend. But if that fails, if we break below it, as this would be the fifth test, it does seem more likely we could be breaking lower. I would think 470 would be a good stop loss level. However, it is good to note that stop losses, at least in my brokerage, Webull, which is where I'm charting this, stop losses are only filled during market hours. So if there is an earnings report and it tanks well below 470, that stop loss would not be executed until open. So I think that's something that is very important to consider, that it could be coming down to this level and bouncing. But if it does break, it could be going down pretty low. And so with the, thesis that it is going to bounce from this uptrend, I could see it coming down to around $4.90. Maybe that's a good dip buy level, maybe a little bit lower than that. But if we do come down to around $4.90 and bounce up to that downtrend, that could be about a 25% swing to the upside. So that does seem like a pretty nice trade to me, as long as risk is managed in case it does tank following earnings on November 6th. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Take care, you guys. Cheers.